want to welcome everybody. Today, I apologize for the delay. We had a max number of attendees that should not have been there and is still there, and we wanted to give other people some time. I'm going to go through a couple of quick items and want to jump into the presentation. You're attending to hear those presentations, not me. The topics today that you'll be hearing about all relate to the COVID-19 coronavirus issue. The first one that you'll be hearing on are the tax matters and incentives that are just constantly changing on a daily basis, nightly basis, hourly sometimes. You'll hear about some treasury considerations and operational aspects. And then at the end, we'll wrap up with as much time we have as it relates to business and the work environment. The three presenters today hitting on those topics respectively are Ken Bagner, who's in charge of the Sobel Company Tax Department and now one of the growth development major participants in the firm. We'll be talking on the tax incentives. He has an immense background in the area, including a master's in tax. Mike LaForge, who is probably one of the most consultative accountants I've ever met, and helping organizations with operations and treasury aspects. We'll be handling those areas. And then Alan Sobel, the managing partner, will be wrapping up the session, talking about business aspects, the business community, and how it's affecting your personnel. There are a couple of housekeeping items. I know some people do want to try and get CPE out of this, notwithstanding the fact that it's a pandemic that we're facing. And accordingly, we have to have certain polls. So we will be launching polls as we go along. I'll do one in a minute. And then I'll have one after Ken, after Mike, and then after Alan. We will save time at the end as best possible for questions. And each presenter is anticipating to go around 10-15 minutes, some a little longer, some a little shorter, but we do want to allow time for questions for you, which I will be reviewing as the presenter is talking. So right before Ken goes, I'm going to launch the first poll. I'm going to give you a minute just to look it over. And if you can answer the question is, how has this affected your business? Please answer the question, because we want to see if people want to see what you think, what your response is, make sure people can hear. And after it's done, after it's around 90% full, I will share it with everybody and then people could see. And we're at 78%. Help me get to 90%, I'll close it. I feel like a carnival barker here. 82. And you need to participate to get the CPE. So, oh, we stalled 86. I guess we can be beneficial and close it out. 87. I will close it out. 29% said moderately. I'll share the information. 29% said moderately. 69% said significantly, and 1% actually said better than before. So that starts us off, Ken, and the 1% I think will listen passively. And Ken, if you could take us away and let's hear what's going on right now, I guess right now, and by the time you're done, you'll have some new information for us.
Yeah, thank you, Brad. Good morning, everybody. So what I'm going to talk about today is first the sick pay leave and expanded medical leave credits and pay requirements, and then talk about the filing of tax extensions that now we don't have to file any extensions, and we're extended generally to 7/15, but I will go into detail on that, as well as last night into this morning, the Senate just passed for 96-0 new bill that's called the CARES bill. That there's a lot of detail in there that I'm going to go through what we know at this point in time. Of course, the House of Representatives may make some changes to it, but it looks like Nancy Pelosi has agreed to also be in favor of passing the bill as well. So we expect the bill to be passed today, and we'll give you some of the main bullet points of what the bill has inside the bill. Okay, so starting off with the last couple of days, everybody's concerned about, of course, what to do with employment and, what they should do as far as being shut down. Well, they came out with, starting on April 2nd, there is a requirement for employers to keep their employees employed to the extent of paying sick and medical leave. What it is for employers who have less than 500 employees, which is the bulk of the people on this call, you have to provide sick leave up to 80 hours of paid sick leave at 100% of the employee's pay. And what that means is there's two different classifications. One is if somebody has quarantined with the COVID-19 or advised to self-quarantine with COVID-19, which I understand advised from a doctor. But the third part is experiencing symptoms of COVID-19 and seeking a medical diagnosis. Those three categories, you would pay the 80 hours of paid sick credit, and you also receive a credit of up to $511 a day per employee against your payroll taxes, which we'll get into in a minute. Now, I've had some questions on this, on what does it mean to be experiencing symptoms and seeking a medical diagnosis. If someone can't get to the doctor, I guess they could claim this category, and that's kind of where you're at. You're going to be stuck into that category. The other three categories are caring for an individual who is subject to quarantine, caring for a son or daughter if the school or child care provider is closed, or any other substantially similar condition as specified by HHS. Again, a lot of people who are caring for their son or daughter because all the schools are closed, that is someone who has a child under 18 years old. There's different credits. You're required to pay your employees up to 2/3 of their wages, for up to $200 per day in categories 4 to 6. Now, that's a 2-week period, 80 hours that sick leave is paid. Part-time employees are entitled to the number of hours equal to the average hours that they work over a 2-week period. I do understand this also includes potential average overtime pay as well. If you have someone who's constantly working on overtime, that goes into the calculation. Now, after the 2-week period, if you have someone who has a child who's staying home from school and they need to care for their child and they're unable to work because the school or child care facility is closed, and due to the coronavirus, eligible employers also will have up to 10 weeks of sick pay for 2/3 of the amount of their pay that you would pay to an employee. And so the way these credits work is you receive, on that case, a $200 per day credit up to $10,000 in the aggregate. In essence, over the 10-week period, that's how they multiply it out. The credits that you receive are actually reduced through your payroll tax filing. So every period that you have a payroll tax filing, you are required to submit the deposits get reduced by the Social Security taxes, Medicare taxes, and I wasn't aware of this, but an information release came out that said also your federal income taxes that you are retaining from the employee's pay. And that includes employer taxes and both employee taxes. So essentially what you do, an example of this would be, I have an employee who is who's out for sick leave for the first 2-week period. And let's say I have, I don't know, like 10 employees who make $1,000. So that's $10,000 per the week. My employment taxes will be $1,500. That's 15% of the 10,000, assuming nobody's been over the Social Security limit. Also, I'll have federal taxes withheld. Let's say $1,500 was withheld. So $3,000 should be withheld during that pay period. One person who is out on leave is going to get paid $1,000. You would only remit into the government a $2,000 payment. Now, if you had 4 employees out for $4,000, then you have a potential issue because you'd be submitting 0 in, because $3,000 is all the taxes you're required to submit in during that payroll period, and you're $1,000 over. What the IRS is saying is that there's going to be a form released that can be filled out. We don't have any information on this form yet. They haven't released it yet, that you fill out, and they'll give you a advanced amount of money, and they'll pay it within a 2-week period. Now they call it an advance, but it's not really advance because you're paying it over. But they'll give you the $1,000 of wages back. So in essence, you're going to get the full $4,000 of wages back for the people who are out on sick pay for that period of time. The same thing will apply as well for the people who are out on extended sick pay leave for their kids who can't go to school and they have to stay home and can't work as well. So as you go through the progressions, what I anticipate to happen, and this is what's going to be very important, everybody's going to have to contact, and I don't know if their payroll providers at this point have reached out to you about how they're going to administer this, because you're going to have to put through codings of category 1 to 3 for certain employees, which the credits are higher, and categories 4 to 6 for the first 2 weeks for other employees where the credit is lower per pay. And then there's probably going to be a separate code that you're going to have to put in for people who are taking extended leave for the additional 10 weeks, where they get paid up to 2/3 of their pay, and there's a limit per day separately for the extra 10 weeks. So that's the way it's probably going to work, and I anticipate the payroll companies have some homework to do to get back to employers so that they can go through their payroll process to report in the information. And then what will happen is the money will be swept, if there's anything to be swept, less whatever you're paying for those employees. So it will net down your payroll taxes. If it's below zero, there's going to be a form that you're going to need to fill out to get the refund. The IRS does say they're going to give it in 2 weeks. I can't bank on you receiving in 2 weeks that refund for the excess wages, because they may just be inundated with claims. So that's basically thought process there. Now, there is a small business exemption for the extended pay, the 10-week pay, if you have under 50 employees, but you actually have to prove that you meet that criteria of having a circumstance where you're in jeopardy to the viability of your business as a going concern. Department of Labor is supposed to provide some rulemaking to articulate what this means. So anyone from 50 to 500 employees are definitely subject to these rules. If you're under 50 or under, for the 10-week period, you may be able to abdicate from these rules, depending on how the procedures are to do it. The DOL says they're going to enforce these rules within a 30-day period, so you have 30 days to get in compliance with these rules. That's the rule so far on sick pay and advanced sick pay leave. Brad, if anybody has questions, I'll stop right here.
Yeah, there was a couple questions. I think you addressed about if there's less than 50 employees. It said somebody asked, is accrued sick pay, which is already being paid, and included in this? I don't know if you have any comment on that.
I believe from speaking to HR attorneys, this is a separate sick pay. There's a separate law. Your regular sick pay and vacation day pay are separate. And depending on, how you go about the process for the first 80 hours, you could originally tell people, for the first 2 weeks of the 10-week period, there's a they could use their vacation days, or they could use their regular sick. But then you go into the first 2 weeks of, if you fall under the 166 categories that I posted up top, or we'll post, I talked about, you're paying 2 weeks out. So from what I understand, this is not going to allow you to use your sick leave or vacation leave that you already have accrued. This is a separate treatment.
Okay. As it relates to salaries, tips and commissions, or is it just base salary?
Tips and commissions, I understand, are actually included. It's based off of your regular average pay that you're paying somebody.
Okay. And the codes that you had mentioned, are they available? Because I imagine the payroll companies will have them, but if people are doing payroll in-house.
Well, yeah, I assume, I don't know where they'll be available, but what we're going to do is put a PowerPoint after we're done, because obviously this has been on very short notice. We're going to put together all the 6 different area requirements, and then you could follow those to figure out how you're going to do your credits if you're doing your own payroll.
All right, I'll give you 2 more quick ones. You mentioned overtime. How is that calculation? Somebody's asking how the calculation is compared. Is it average? Is it the prior week? Or they
It's I believe it's an average, and I think it's over a 6-month period. You look at your averages of overtime that you've paid, and then you go through that and figure out how much that is on an average basis.
Okay, and the last one we'll talk about for right now is temp employees. Are they also considered in here?
Yeah, temp employees, I believe, I got to take a look, but I believe that they are considered in here. But I have to, I believe if you worked up to, and I don't have the notes on this because I was looking at this before, if you work even an hour, I think an hour or so, you're included into this categories.
Okay, all right, so we got a bunch more questions, but we'll let you go on a little bit, and we will try and get to everybody's questions. I know Ron has asked about the Schedule C. I think you addressed that earlier in the beginning. I don't know if you want to say anything about that real quick. Otherwise,
Yes.
we're gonna, go ahead, you want to say it?
Sure, Ron, the Schedule C, I believe that you're going to have to wait a little bit longer because it applies against your federal income taxes. And of course, you could reduce your estimates if you're paying in tax estimates to make it lower, but that's generally how it will work.
Okay, and I know there are other questions. We hope to try and get to all of them. We'll try and archive the questions too, and reach out to people. But I want to let Ken go on because I think he has a couple more things to talk about, right?
A lot. We have to talk about extensions. This is going to be the bulk. There's a lot of things to talk about, and then also the law that just potentially will pass today. On a extension standpoint, nobody needs to file an extension. The tax deadline's extended to July 15th from an individual basis, and that includes your first quarter estimate as well as your federal taxes that are due on April 15th. Now, the states, New Jersey has not issued anything. I think they're all off on leave. New York has followed federal to July 15th. There is a state chart that we could send a link to look at your state if you're not in New York or New Jersey, that will show what your state has done. This postponement is for everything that was due on April 15th. And to be very clear about this, it does not include your second quarter estimate. So your second quarter estimate becomes due before your first quarter estimate. Your second quarter estimate would be due typically June 15th. That's the day your second quarter estimate is due. This includes all types of forms like 1040s, 1120s, and any sort of form that was due on April 15th. 990Ts, if they were due April 15th, they're postponed to July 15th. But if they're due May 15th, they're still at this point due May 15th. That's where we're at on that. This does not include any relief for payroll or excise taxes, which, of course, if you fall under some of these payroll rules, you may have relief of payroll taxes. It does include any foreign taxes that you may be due under 965H, which related to Trump law that you had to repatriate earnings. It doesn't include filing your state and gift taxes as well. Those the filing dates continue to be the same filing dates. So you don't have to file any forms. If you did file your forms already and you did automatic withdrawal, there's nothing that we can do as a firm to get that back. It's going to get paid on April 15th. If you do file your tax return, just to be clear, everybody on the call, you could file your return before July 15th. You don't have to pay your taxes. What we're going to do is put in vouchers, no automatic withdrawals, so that you could pay a check in July 15th. So theoretically, you could file your tax return tomorrow and then make a payment on July 15th. There will be no interest and penalties to do that. The extended due date, you have to do an extension July 15th, will be normally up to October 15th, 2020. That's the way it will work. And again, the federal relief does not apply to state liabilities. We're still waiting for New Jersey to comment on that. IRAs are moved to July 15th as well. So you can make an IRA contribution up to July 15th, and you could also make HSA or MSA contributions up to July 15th.
Now, Ken, this doesn't apply to real estate taxes, or they're not addressing that you know of, is it?
No, there's no addressing of real estate taxes at that point. That's on a local level. So unless a town has come out with a pause or stay on real estate taxes, right now your real estate taxes are still due.
Okay, now I'm going to let you take a break for a second, Ken. I just want to launch the next poll because I just want to make sure we're doing it and give you a chance to catch your breath. So if you can, everybody can just look at the next question real quick. What percent of your people telecommute at this point? Again, as soon as we get to that around 90%, we're going to jump right back in. I think Ken has some more to go through. We're at 50, 57. IRA moved. Okay, Ken, one of the questions is, okay, IRA moved. What about Kehoe plans? Was one question. And if employers already applied for unemployment, can they still receive mandatory sick leave? And if so, when are they eligible to get this?
Okay. The first question, I don't believe I've seen anything on that at this point, so I haven't seen an extension. The second question, on the mandatory sick leave, I at this point, as far as I'm aware, and you may have to reach out to an HR attorney, that if you're already out on leave, I don't think there's a recapture. Now we're going to get into where you could apply for this. We're going to get into the new laws that may get passed, which some employers may hire back their employees because of it. So that could be something that makes a change based on some of the things that the employers want to take advantage of. And I'm not positive, what the states are doing or whether they're going to require you to, pay some sick leave out. So that's something that, I think we're going to have to just wait on this call and try to get back to you on, because there's no clarity there on people who've been fired before April 2nd.
Yeah, and I mean, I'll apologize for Ken and for Sobel Company, is that, what we're saying today, some of this may have passed and is a little bit more written in stone, but some of this stuff is just from the information we're gathering all over the place and may change today or tomorrow type of thing. Right, Ken?
Yeah, so the first part we covered on the payroll credits that relate to the sick leave, that has passed, that bill. So has the extensions. Going back for anyone who's laid off employees before the 4/2 date where the law goes into effect, that's the part where, I haven't seen any guidance on whether or not you would qualify at this point.
Okay.
Okay.
All right.
So any questions on the extension portion where we talked about the extended due dates?
So you should make sure you use voucher 2 for June, in other words.
Correct. So you would use voucher 2 for June, and then you pay voucher 1 after you pay voucher 2.
Sounds logical.
Can I just jump in here for a second? It's going to be interesting as far as voucher 2 is concerned, because voucher 2 normally covers income that is earned in the months of April and May. And as long as we in New Jersey, New York, and Pennsylvania are shut down, it's very possible that voucher 2 will be negligible. So I think you do have to go and look at this specifically for those 2 months. And with our assistance, we'll walk you through that whole process of voucher 2.
Thank you,
Yeah,
Mike.
that's good. That's a good point, Mike. You know, most businesses may not have anything to pay voucher to. That makes sense. All right, so going into, as of last night into early morning, the Senate has passed 96-0 the CARES Act, and we have provisions here which we've listed out, which I'm going to go through. This doesn't mean that everything's going to remain. The House may make some changes to this, but from what I understand, Nancy Pelosi is on board with the bill, and I don't know if many of these provisions will change. So just starting off with the rebates, the first thing is individual tax rebates. Anyone making single under $75,000 or married filing joint under $150,000 will receive a $1,200 rebate single, $2,400 rebate married filing jointly, plus $500 per child under the age of 17. So that's a total of $3,400 maximum check. Once your AGI gets over, or adjusted gross income becomes over that amount, you lose $5 of your payment for every $100 your adjusted gross income exceeds those thresholds. Now, what I understand that's interesting is that if you receive the $3,400 check, for example, and because they're basing this off of your 18 income if you haven't filed your 19 tax return. Let's say your 19 tax return, you earned $1 million. In 2018, you earned $100,000. So you applied, you actually qualified for this. There's no mechanism at this point for a payback of that check. So once you get the check is yours. That's what I understand at this point. Whether there's a change to that in the final bill, we'll have to see, but that's what the bill says. So that's on the repayments or the checks that are going to go out to all the individuals, taxpayers who qualify under those limits. Now, the second provision, which is a pretty big provision, and we're going to need more information on this, is small business loans. Businesses with under 500 employees will fall under Section 7 of the Small Business Act to be able to receive loans, which are going to be the average payroll cost for a year ending on the date of the loan multiplied by 2.5. So essentially 2.5 months of payroll. What I understand is there's going to be a guarantee of these loans, but there's going to be a limited guarantee. The loans can go up to $10 million. And the payroll costs are actually all of these items, which is more than payroll. It's going to be wages, commissions, salary, cash tip or equivalent, vacation pay, medical sick leave, health insurance, retirement benefits, state and local taxes assessed on the compensation of employees. So that's and the caveat of this is the compensation will not include any employee in excess of $100,000. It will not include their payroll taxes, any compensation of an employee who is a resident outside the U.S. Those are the things that are excluded. The loans will have a 10-year maturity not to exceed 4%. They may be used to cover payroll, mortgage payments, rent, utilities, any debt service requirements that you have. Now, dovetailing into this, there's a loan forgiveness program here where the CARE Act calls for a portion of the aforementioned paycheck protection loans to be forgiven on a tax-free basis. The amount to be forgiven is the sum of the following payments made during an 8-week period on the date of the loan. So it begins on an 8-week period based on the date of the loan. Payroll costs, mortgage interest, rent, utility payments, and payroll costs is as defined above, anyone under $100,000 will pay. But to seek forgiveness, you have to submit an application to your lender that includes documentation verifying the number of employees and pay rates, show canceled checks of your mortgage, rent, utility payments. And so, for example, let's say you had a loan of $2.5 million and the business pays $1 million in payroll costs, mortgage, utility payments. you would basically have, potential $1 million forgiveness on that, assuming all the employees were less than $100,000 in pay. Now, there are some things that reduce or hurt you to not receive the reduction. If you reduce your workforce during that 8-week period when compared to other periods in 19 or 20, or reduce the salary or wages paid to an employee who has earned more than $100,000 by more than 25% during the covered period, you start losing some of your forgiveness of the loan. So again, this is something that is going to be, there's more information to come out for this, but I think this is one of the most significant provisions for small businesses under 500 employees.
If they never had a payroll, again, the Schedule C type of thing, if they never had payroll, would this come into play?
I can't answer that, Brad. I don't know.
Fair.
The reduction, they also say the reduction will be avoided if the employer rehires or increases the employee's pay within a allotted period of time. So if you've fired somebody, if you rehire them, it's going to be helpful.
Okay.
It also applies to sole proprietors and ESOPs. For any loan made under this program, no personal guarantee will be required on loans below 200 for sole proprietors or self-proprietors and ESOPs. So again, it also applies there as well. And then the government will pay back the principal and interest on the loan for the first 6 months for which payments are due. That's for the ESOPs and sole proprietors. So now the next part is, I think that's a big provision. I don't have a lot of answers to questions on this. This is information I'm reading online, on the bill. Again, this is subject to some change if the House has a change, and then the Senate, if they have a change, the Senate will have to vote again on this bill. So preliminarily, it seems like those are the provisions. It seems extremely favorable for employers who have employees under 500 employees. We have also, for real estate, there was a problem with the qualified improvement property where you were not allowed to depreciate it on a life under 39 years from a technical problem in the law. That's been changed back to 15 years once this vote passes. The other thing, you're allowed to withdraw from your pension plan 100 grand tax-free if you have the coronavirus or have a spouse or dependent who's diagnosed with one of the two diseases or experiences adverse financial consequences as a result of being quarantined, furloughed, or laid off, or having work hours reduced, or unable to provide childcare. When I say, I'm sorry, penalty-free, not tax-free, I think I might have said tax-free. So there's no 10% penalty on that withdrawal. The IRS is apparently going to add a above-the-line charitable contribution deduction for $300. So it's not going to be an itemized deduction. So if you don't itemize, you're going to be able to deduct $300 for charities. And you're able to pay your employees' loan debt for student loan debt up to $5,250 without having an impact on income for your employee, plus get a tax deduction for it. Okay, so the other big provision is called an employee retention credit. Employee retention credit is a 1-year only credit against 6.2% of your Social Security taxes for any business that's forced to suspend or close its operations due to coronavirus, but that continues to pay its employees during the shutdown. So it works like this, you're eligible in 2 ways. One, the operation or business was fully or partially suspended during the calendar quarter during 2020 due to orders from an appropriate government authority resulting from coronavirus. Business remained open, but during that any quarter in 2020, gross receipts for that quarter were less than 50% of what they were for the same quarter in 2019. The business will then be entitled to a credit for each quarter until the business has a quarter where it's recovered sufficiently that receipts exceed 80% for what they were in the same quarter in the previous year. For each eligible quarter, the business will receive a credit of 6.2% share of Social Security taxes paid to each employee for that quarter ending on December 31st, 2020. Now, there is a cutoff of 100 employees. So if you have over 100 employees, qualified wages are only limited to the wages that were paid by the employer during the quarter for the period of time the business was shut down. If you have less than 100 employees, the qualified wages include not only those paid to employees during a shutdown, but also wages paid for each quarter that the business has suffered a sharp decline in year-over-year receipts. So again, more to come on that, but the two major provisions to take out of here is the loan that you're going to be able to receive that may be forgiven for up to almost 2 months of expenses, and then also this potential reduction of payroll taxes related to the credit here, the employee retention credit. There's also, this third thing also is pretty important that they have in the law, which is called the delay of payment of employer payroll tax and self-employment tax. In addition to all these credits, they're going to allow employers struggling with the coronavirus and under the CARES Act to make payroll by allowing employers' share of the 6.2 Social Security tax would otherwise be due through December 31st, 2020 to be paid on December 31st, 2021, 50% of it, and 50% in December 31st, 2022. So essentially what they're saying is, and I assume this is going to be a little bit of work to try to figure out how this all works, because you're going to get your sick leave pay where you're going to reduce your payroll taxes, I guess. And then after you reduce all your payroll taxes for your sick pay leave, what's then going to happen is whatever taxes you're supposed to pay for your Social Security portion only, the 6.2% for the employer share, will be postponed, and you'll accrue that up to the end of the year. And whatever that number is, let's say it works out to be $50,000, you'll pay $25,000 of it December 31st, 2021, and $25,000 of it December 31st, 2022. So in essence, this is a deferral of your employer's share of your Social Security tax. I assume it will be after all these other credits and all these other business reductions of employment taxes that we've already talked about before. Self-employed taxpayers can defer up to 50% of their self-employment tax that would be through the end of the year, and they'll pay back that portion, half of it in 2021 and half of that in 2022. Another thing that looks like they're going to pass is the net operating losses. So under the new Trump Act, net operating losses were only allowed up to 80% of your income. Now they're going to allow it up to 100% again, and they're going to allow you to carry back your losses from 2018, 19, and 20 back up to 5 years. So you'll be able to go back and whatever losses you have, go back 5 years on those years and carry them back for a 5-year period to get refunds. So for example, if you had a 2018-19, you had $1 million each of income. In 2020, you had a $3 million loss. You could take your $3 million and carry it back to 18 and 19 and get all those taxes refunded that you paid in 18-19. Then you have $1 million carry forward remaining for your net operating losses that you can use. The other thing that they did as well, it looks like, or they're going to do, is a temporary removal of the $250,000 or $500,000 limit to reduce your business losses against other income. That's going to be temporarily removed as well. I don't know how long that's going to be removed for, but what that has caused problems on is if you had portfolio income like interest, dividends, or other income way over the 250 or 500 limit, whether you were single or married filing joint, you'd only be able to use 500,000 of your business losses against other income. That's eliminated for now. It's temporarily removed. It's going to come back into effect in a later period. And the last provision I have here, and I know we've gone through a lot of information. That's why what we're going to do after this call is put this all into a PowerPoint presentation that you can download off the website, is changes to interest limitation rules. They're going to change the interest deduction from 30% to 50% of your income. So there's a limitation on how much interest you can deduct on your tax return. It's basically 30% of your EBITDA in your company, which is your earnings before depreciation and amortization and interest and basically taxes. You could add all that back, and whatever your income is, you can only deduct up to 30% of your interest expense. They're moving that up to 50% of your interest expense. That's what I have on the bill at this point. I'm going to stop here with questions, then we'll move on to Mike. And I know this is a lot of information, but again, this stuff has been passing relatively rapidly.
I mean, so my problem that I have with this is I have an accounting degree only, and it sounds like I need an engineering degree, Ken, to try and follow this whole thing. Or I need to be a spider with the web that they've created. So it's thank you for reading all into this information, Ken. I know that you were reading up through last night and you were talking about it this morning, and you know, we will talk later on. I'll say at the end, we're going to have an update probably next week on part of this topic and other topics. But before we go to Mike, I'm just going to launch the next poll. And Mike, I think this question is going to be directed at you, so I'll read it while we're launching the poll. But give me a second. Let me just launch the next poll. How long do you think it will take for your business pretty much to recover from this? Mike, the question that was asked while they're answering the poll, will the SBA EIDL declaration be required in the SBA loans? Parenthetically, will we be required to provide examples of businesses in the disaster suffering substantial economic injury? So that was a question that was asked by Courtney. And while the poll is up to 78%, in a couple of seconds, I'm going to close it out. 50% say 6 months, 10% say 1 month, 33% say 1 year, and 8% say they may not recover from this. I will close the poll, share it, and I will hide it in a second. Poll is tough to answer. Dan, the poll is just to make sure people are still awake. Okay. All righty, Mike. Thank you.
All right, my turn. Well, good morning, everybody. I guess one thing that happened with this pandemic is that the baseball purists did get their way. Opening game was not played in March, which is, in my mind, a sacrilege. Baseball should be played in April and go through October, and that's the end of it, but we'll see. Yeah, I think that everybody is sort of shocked with everything that's been going through over the last couple of weeks from the standpoint of who would have imagined complete shutdown of facilities, people working from home, and so on and so forth. You know, we've dealt with these things over the last 20 years, or things that are similar with Sandy and 9/11, but those two particular incidents, at least in the New Jersey, New York area, were somewhat localized and revolved around loss of power or closure due to fears of further attacks and so on and so forth. This is very different. It's a global issue. People aren't allowed to go out and shop. They can't do anything, and it's scary. You know, every client and every individual that I've spoken with are very concerned as to what's going to happen tomorrow. And I think the big thing here also is the length of this. In other words, at one point you hear, a week, then you hear 8 weeks, then you hear 10 weeks. So, it's very difficult to plan when you don't have any idea of what your horizon is. So I just want to spend some time going over, some of the things that I've been working with clients, talking with clients CFOs as far as what they're doing to get the companies through this period of time. Big thing right off the bat, cash is king. I don't think that's something that anybody has to emphasize greater than that just simple term, cash is king. So I think in every single case, businesses do have to find ways to conserve their cash and come up with plans that'll get them over the next 30 days, over possibly the next 90 days, and all the way out to 180 days. And even though there are these programs that are going to be available, whether it's SBA and some of these other loan provisions that the government's going to provide under the CARES Act, I think that, you know, you almost have to take the approach of, if we're left on our own, how are we going to get through this? I think that some business owners are sort of playing it off the cuff. I'll cut here as I see needs. I'll do this as I see this happening. But I'm suggesting, and I know a lot of CFOs are following, you sort of got to budget this out. You sort of have to plan this thing so that you can actually see what effects your business are going to have when there's a reduction of revenue. I mean, there's no doubt that every business is going to have a reduction of revenues, with some exceptions like supermarkets. But I think by doing something that is actually put on paper and quantified, you'll have the visual that will make you examine these areas and be more realistic from the standpoint of where cash inflows are going to come from and how you're going to manage those cash inflows versus what's going to be going outside. So again, I would certainly suggest that people put together budgets over the next few months if they haven't already. You've heard talk of people drawing down their credit lines. So if I have a credit line of $2 million and it's not used at this point, do I draw it down? Well, I can tell you that of all the banks that I've spoken with, I've gotten a very good feeling from the standpoint of where they're going to come into this game. Don't forget, everybody, this is very different than a banking crisis. This is a health crisis. The banks are all in very, very good shape, and they have every incentive in the world to lend money. So I think one of the things that many clients have decided to do is to draw down on their credit line. I guess it just makes them feel a little bit more comfortable, understand that they'll have you know, the accrual of interest over a period of time. But again, what it does is it'll put some gas in the tank and have it for tomorrow when cash flow might be needed. Suggesting, if you haven't talked to your lenders, talk to them. Make sure that you stay with them from the standpoint of giving them information as far as how your business is doing. If you haven't gotten your financial statements issued for 2019, do that and try to get them done as quickly as possible, because you may need to bring them up and bring them to your financial lenders, whether it's SBA, whether it's any of the other lenders that you might be going to. So again, cash is king. I think, you know, I think we're all pretty veterans in this whole area of where to save, so I'm not going to go through some specifics. But again, in the area of negotiation, clients are negotiating with customers. They're negotiating with vendors. They're negotiating with their landlords, all trying to get on the same page as far as what can I do, what can I expect. You know, we're all in this thing together. You know, it's amazing how this chain just completely breaks down if somebody doesn't pay a bill. So I don't pay the mortgage. Then all of a sudden the bank doesn't have the funding, or I don't pay my landlord, so they don't have the cash. So again, I have a lot of clients that we're talking to that are negotiating amongst all their key people and all the vendors and their customers. So again, I think keeping the lines of communication open are very, very important. Make sure everybody knows where you're having problems. I did say something before about not getting into some specifics, but clients are cutting back on some non-essential costs, including you know, things like travel. Obviously, we're all sort of restricted, so that's an easy one. Marketing costs. It was interesting. I was driving the other day, and there was an ad on the radio for a car dealership. I'm sitting there going, why are they advertising you know, for cars on the radio when you can't even go into a dealership and purchase a car? I think most clients, if not all clients, have already looked at their burn rate as far as cash. They probably started doing that weeks ago. But again, continue to look at those things and see where you can cut. We've talked a lot about payroll. If you noticed in this CARES Act, it sort of mirrors the Tax Act from a couple years ago, where a lot of emphasis on payroll, a lot of emphasis on real estate. So again, I know it's a tough decision for business owners what to do with payroll, but there's a lot of incentives out there for the business owners to continue to pay employees with the ability to then turn around and be able to get some of those dollars back at some point in time through credits or loan forgiveness. The other piece about it is that I think business owners also have to look in the mirror and also think about cutting some of the cash that they may be taking out and leaving it in the business. The other key word here, delay, defer where possible. We talked a little bit about that. Ken did talk about the income and tax deferrals, which I think can be very, very big, especially for those who are pass-through entities that are having, they're paying taxes on an individual. There's things that come up every single day, so we will keep you abreast on that. So, like for instance, I was personally very surprised that the state sales tax in some states were deferred. That wasn't something that I was expecting, but we have been looking at the associated websites, and I think if you're filing in multiple states, that you can take a look and see whether or not they are deferring sales tax payments. Like I mentioned, Ken did go through the deferral as far as the federal and state income taxes. Talk to your lenders. From what I've been told with many of the banks, there are 3-month deferrals of loan payments that are available. Like I said, it's a communication type of thing. Don't ignore it. Pick up the phone or send an email to your lending institution and see what's going on with that. I think one of the things that.
Mike, one quick question, because somebody asked and you're right on topic. Do you think that the banks are going to be very receptive at issuing waivers if needed, to be able to go for some of these government programs?
Well, I don't want to speak for the banks, but I would think that, like I mentioned before, this is very, very different times. And I think when I see the cooperation amongst everybody during this time, we're all in it. This is a very unique situation with a health crisis here. And I would think that the banks are going to be very, very open to waiving debt covenants. And I think the Fed and everybody up the chain is going to be pushing the banks to waive those type of things because, again, the incentives that have been provided to the banks to lend are tremendous, from the standpoint of availability of funding. So I would absolutely see that happening. One of the other things I just think is where I just don't want to miss anything or anybody miss something is, I don't know about anybody else, but this past couple of weeks have probably been the 2 craziest weeks in my entire working career. Not only from the standpoint of the communication amongst, trying to, work within our own organization, but working with clients. It's almost as if I feel like a hockey goalie and the pucks keep on coming. And as much as I keep on deflecting them, they keep on coming. What am I not seeing? Is somebody, sneaking up behind me and taking my water bottle? That said, I think that there's a lot of stress that's going on, not only with people who are our managers and also people who are our staff, where possibly they're going to take their eyes off of certain things. So again, I think you have to emphasize to everybody that you have to continue doing what you need to do. I got this fear, and we heard a little bit of a hint that possibly the SBA website went down because of some hacking and that type of stuff. Please keep reminding your people, your staff, to be very careful of what they're clicking through. There is so much stuff coming through and so much traffic. I just have this crazy vision that we're going to hear some real horror stories over the next couple of months. So please keep your eye on the ball. The other thing is that in case somebody brought up the whole bit with real estate taxes, normally, we're looking at a May 1st and August 1st real estate tax. I haven't heard anything on the local side, although those who do see fit to have a tax appeal, the date has been pushed back. So the deadline, if I remember correctly, was April 1st. It's now been pushed back to May 1st, or 30 days from the time Governor Murphy does lift the order. So again, that could be someplace not only that that's where we can find some dollars, or you can find some dollars, but get in touch with the the attorneys and the other real estate professionals that are making those claims. Ken did touch on the finance areas and the loans and that type of stuff. And again, I don't want to give anybody the impression that we are holding ourselves out as loan experts, but there are a couple things just that I do want to touch on. One area that I think everybody has been hopping on, it's been available, are the whole SBA loans. We have been suggesting to clients that you do, whether or not you're going to take it or not take it, you do go online, you do apply. I'm told it's about a 30 to 45 minute application process online, but like I said, there have been delays. You can imagine how many people are jumping onto this thing. SBA is going to try for a 21-day approval, and then with a funding period 7 days somewhat after that. The money will come through wire or check. It will be a one-time draw, and there'll be a deferral of when the repayment starts for 11 months. Loans are for working capital. If you're a business that would be asking for a $25,000 or less loan, no collateral. Your business must have presence in federal disaster areas, which certainly in the tri-state area we have. Interest rates 3.75, and it's also open to nonprofits. Up to $2 million, although the SBA can waive that $2 million fee. No prepayment penalties. We don't know what the state of New Jersey or New York are doing at this point in time. There's nothing really out there from the standpoint of indication. There are going to be limitations from the standpoint of tangible net worth. I've already run into that a problem with a client, and if my notes are correct, that tangible net worth is $15 million, and there are also some average net income limitations. Past 2 years can't exceed 5 million. But again, these are things that are out there, but they are changing. Ken Wagner did talk about the whole bit with the paycheck, which I think is going to be known as the Paycheck Protection Loan. So I'm not going to go through all the details on that, but that's the one he talked about before, where you can look at your average payroll and effectively your average occupancy costs, rent, utilities, things like that over the last year, multiplied by 2.5%. Multiplied by 2.5, and it establishes a baseline for the loan up to $10 million. The other one that I think everybody's going to hear about, if you haven't heard it before, it's an economic injury disaster loan. Probably the only place that I ever remember it being that I was involved with was the crisis down in Puerto Rico a couple of years ago. But that's going to be, again, working capital loans. It's going to be for businesses that are 500 or less. It's going to have a waiver as far as principal and interest for the first 6 months. I don't want to go into too much detail on that because some of those details aren't completely out. We're dealing with things that are going to be adjusted throughout the next couple of weeks, and also followed up with corrections that come through over the next couple of weeks. So that's sort of my little blurb on some of the financial planning and what people are doing as far as business operations. And I'm also conscious of people's time because I see we are at 9:34.
And Mike, a couple quick questions I want to go to before we go to Alan. I think one of them is going to be easier for you to answer than the other. Can I get an SBA loan if I already have a line of credit, a loan / line of credit with my bank from Harry?
Yes. The answer is yes. A few of us were on a phone call the other day with one of the major banks going through the whole SBA world and how that's going to work. And we were assured that absolutely, if you have existing debt, that you'll certainly be able to apply for an SBA loan.
Okay. The other one I think is
one of the things that also, again, people have to also understand though, is that the SBA and a lot of these loans are really dealing with working capital. So I don't want people to think that they can get an SBA loan and they're going to put an addition on their building, or they're going to go out and necessarily buy equipment. Those are different types of programs that you'd have to look into.
Okay. One that's right before I launch the poll, I'll ask it and then I'll launch the poll and you can answer. does the traditional rule against SBA loans to venture-backed affiliated entities apply on the relief package? I don't know if you have that information.
I don't know if I have that information either. I don't even know if I understand the question. Okay.
So the client of mine was the one who asked that question, and I forwarded him over to the appropriate party to answer that question.
Okay, great. Thank you, Ken. All right, so we're going to have Alan Sobel's going to kind of wrap up the session as to some business aspects before I make some last announcements. Everybody sees the last poll that's running right now. How will this change how you operate? Meaning, do you think you'll continue with telecommuting? Will it reduce your real estate footprint, et cetera? Where if we can just answer this and we can get moving along with it, I'm looking to see, can you apply for SBA loan if you already have worked with Ryan? That was questioned, answered yes. Will SBA require any collateral, Mike?
Oh, I'm sorry. Daydreaming here for a second. Yes. Again, there will be items of collateral. There are parts of it whereby there will be collateral free, and those are the ones of under $25,000.
Thank you. So 25% said yes, it'll significantly it will affect how they operate. 35% said moderately. 16% said just trying to get through today. I appreciate that response. And Alan, speaking of just getting through today and tomorrow, can you give us your thoughts?
Yeah, so thank you. First of all, good morning, everybody, and thanks for joining us today. I hope this has been, helpful and giving you some background. And I really appreciate Ken and Mike spending the time to really analyze these things. So good job, guys, and thank you very much. I'm reminded of a quote that that was offered by the great philosopher Michael Tyson before he fought Evander Holyfield, when they asked him about Evander Holyfield's plan to beat Mike Tyson. And Tyson commented back saying that everybody has a plan until they're smacked in the mouth. And so, I think this COVID-19 is our smack in the mouth here. Many of us, most of us, had prepared for contingencies and disaster situations, but nobody could anticipate the breadth of what this tragedy is bringing to not just the economics, but to people in general. And I think that's an important thing to understand, that while this is a business tragedy that we're all dealing with as financial executives and business owners and people working in the business world, it is also equally a personal tragedy. And I think we have to be mindful as business leaders that, we have people that are sitting at home if they're working remote, or people that are even going to their job that are scared to death as to what may be next. What will their livelihoods look like? How will they make that mortgage payment? Unfortunately, most people don't have a whole lot of savings put away. They even salaried people are living, paycheck to paycheck and are counting on their income. And so this is incredibly, uncomfortable for them. And so I think it's incumbent upon us as leaders not to be bosses right now, but to be leaders and to communicate consistently with our people, letting them know what's going on, providing a level of transparency that they can, at least get information from. I know they're going to be incredibly appreciative of it, even if you don't have answers, even if you don't know what the next day is going to bring. Communicating those things to your employees, to your colleagues, is incredibly important. I will also say that it just doesn't cover those that work directly for you. It also covers those people that are indirectly working with you. So make sure you're talking to your customers, see what's going on in their world, talk to them about how you can, as an organization, can be helping them get through this tragedy in one way or the other. And then equally important is talking to your vendors, helping them understand what their expectations are going to look like in terms of your ability to either make payments or to make purchases, or both. Again, communication is key. Mike talked about talking to the banks already, so I won't spend any time on that. But again, all of those level of communications are really, really important. It is a unique time that we're all working in here with, I think I saw earlier, something like around 60% of the workforce is working remotely. It's easy for people to get lost when they're working remotely. And so again, make sure you're reaching out to people. Tools that we were using internally in our organization on a kind of a haphazard way. In this case, we use Teams. Other companies are using Zoom. Some are using something called Fusion 360 or Slack. There's a lot of tools out there. We are fully engaged in using right now. We are holding firm-wide meetings with video conferencing. We are holding smaller team meetings. We're having leadership meetings on a regular and consistent basis. And I would encourage all of you to be doing the same thing. Again, communication is really, really key. Just some anecdotal stories. We have one client that laid off 80% of his workforce because his business came to a complete grinding halt. And we have another 2 clients that I'm aware of, and maybe there are probably more, that are hiring people. We have one client who told me that their sales are off 60% in the period of this shutdown. And again, I'm sure it's all over the lot. And then we have other clients that are up 140%. So it really runs the gambit, but I do think that the people that are going to be suffering, the businesses that are going to be suffering, are going to far outweigh those that are thriving during this period. But I am incredibly encouraged by the polls that I saw that were here today, where people feel that they'll be impacted somewhere between 6 months to a year, and very few think that it's a permanent impact. So again, use this as an opportunity to communicate that to your people, to your customers, and to your vendors, and so that when we do come out of this, we're all stronger as a result of it. I think the one thing that you didn't touch upon is how is the ability to operate, particularly as it relates to paying vendors and collecting cash receipts when people can't get to their offices and collect things. So I'll just share what we're doing as a firm, and you can take it from there. One of the things that we're doing is for cash receipts, we do have some what we call on-site essential people. So they're going to our office on a periodic basis, and they're collecting the mail. And then what they're doing is they're making the deposits. We're probably, right now we're doing it daily. We may have to move to a more infrequent period, but at least we're capturing that. And the other thing we're doing is we're providing on our own invoicing, notations about how you can now pay your bills online, either with credit card or with a wire transfer. So, we're all taking provisions to make sure that we keep the cash flow moving, because at the end of the day, while we will have reductions in our sales and we will have some difficulties here, liquidity, as Mike talked about, is key. And so we have to make sure we keep those things going. So again, I just want to emphasize that, this is not only a business tragedy, it is a people tragedy. And I think what we all need to do is just be mindful and good and effective leaders by communicating frequently and often. I want you to know that we as a firm are here for you. As you can see, we're really working hard to try to understand what all these things are. We don't have all the answers yet, but we will get them, and we will do our best to communicate them to you. And feel free to pick up the phone, send us an email, do whatever is necessary to get in touch with us so we can help you address your specific concerns. So with that, I wish you all really, really well. I'll turn it back to Brad and let him deal with whatever wrap-up stuff he needs to.
Thank you, Alan. Thank you, Mike. Thank you, Ken, for all the information. It's very difficult when Ken and Mike and Alan and myself have been dedicating hours, and a lot of us have been dedicating hours to reading this information that's out there and trying to put it all together to you within 1 hour and to answer questions. So we apologize if we didn't hit on a topic in great depth that's needed. But we're happy to discuss it with you. We plan on having a follow-up session. I know that there were questions like Drew was asking for additional information on the 100,000. Somebody was asking if personal guarantees are required for SBA. You can always reach out to us. We'll try and get you some of that information directly. I will, if I can figure out how to export the questions, try and forward them to Ken, Mike, Alan, anybody else in our office. We're not just limited to the four of us. Anybody else at Sobel & Company that can help provide and guide you through these tough times. With that, I want to give you our resources that are available. I will put it up on the screen. You should be able, is that slide showing right now?
Yep.
No, thank you.
Yes, it is.
What our goal is for next week, we are probably going to have another session. First, we are looking to try and have a session for nonprofits also. We're trying to see how best to have that session, so watch for email information from our marketing department, Colleen and Sally, that will be letting you know if or when we'll be having sessions as it relates to nonprofit organizations, and also probably try for next Thursday again, where we will try and give an update on these incentives. I know that Mike wanted to try and get some more information from a SBA lender and give a little bit more succinct information. Hopefully at that point, a week later, maybe we can all get out of the house finally. We're not sequestered, but also we'll have a little bit more clarity as to where we're going with the business community and the world at large. At that point, we're going to wrap up the session. I want to thank everybody for attending, and again, I will try and look over the questions and email any information that we can. Thank you very much, gentlemen.
Bye, everybody. Thank you.
Thank you.
Thank you.
I don't know how to shut it down.